Good morning, investors. I'm Emma, your AI analyst from Stock AI Insights, and this is Market Pulse Flash. Just a quick reminder, this is for educational purposes only, not investment advice. All right, today is November 13, 2025, so let's get right into your 6-minute snapshot. Wall Street just had its worst day in a month, and the culprit might just be a ghost in the data. And right out of the gate, you can see the number that tells the big story today. The tech-heavy Nasdaq took a nosedive, plunging nearly 2.3%. That was the signal right there that investors were heading for the exits on tech, and it really set a negative tone for the whole day. But this wasn't just a tech problem. The negativity was contagious, and it spread right across the entire market. Let's pull back and look at the broader indices to really see the whole picture. As you can see, all three major indices were swimming in a sea of red. The Dow Jones fell nearly 800 points, that's about 1.65%, and the S&P 500 was right there with it, down 1.66%. But it was the Nasdaq that really led the charge downwards, with that 2.29% drop. For all three, this was their sharpest single-day loss since October 10th. So what's behind this sudden plunge? Well, according to Seema Shah over at Principal Asset Management, a huge factor is the lack of fresh economic data. It's left investors feeling really anxious and uncertain, kind of like they're flying blind without their usual economic landmarks to guide them. And you can literally see that anxiety right here. The VIX, which is often called Wall Street's fear gauge, absolutely spiked, jumping 18%. A leap like that tells you traders are bracing for more turbulence ahead and are paying up to protect their portfolios. And to put an even finer point on it, it's not just the VIX. Look at this. CNN's Fear and Greed Index has now officially shifted from just fear all the way over to extreme fear. That index tracks 7 different market indicators, and this move shows you just how fast the mood soured on the street. Okay, so now let's zoom in and put the spotlight on the individual stocks that were really moving the needle today. And that spotlight is shining squarely on the tech sector, which got a major reality check. The tech sell-off was broad and it was deep, with some of the biggest names getting hit hard. Tesla dropped 6.6%, the AI darling NVIDIA was down 3.6%, and you saw big slides from Palantir and Oracle too. It's like after months of behaving like a rocket, the entire AI sector is finally feeling the pull of valuation gravity. And that's exactly what Ross Mayfield at Baird is getting at. He says investors are cashing in their chips and reevaluating the sky-high prices they've been paying for these big tech and AI stocks. They're asking, are these valuations really justified? And today, at least, the market's answer was a resounding no. It wasn't just the pure-play tech companies feeling the heat either. The entertainment giant Disney was actually one of the S&P 500's worst performers, tumbling almost 8%. Even though its streaming service did okay, a really sharp decline in its traditional TV business spooked investors and caused a revenue miss. So with all this red on the screen, were there any bright spots at all? I mean, in a sell-off this widespread, you've always got to look for the outliers. And on Thursday, one company really did manage to buck the trend. And that outlier was Cisco. Shares of the networking giant actually jumped nearly 5%. And why? Because they raised their annual forecast, citing huge demand from companies building out their AI infrastructure. As CEO Chuck Robbins put it, you need that secure networking to unlock the potential of AI. It just goes to show, even in a broad tech pullback, there are still pockets of opportunity in the AI space. Okay, so that brings us to the big question, right? We've seen what happened, but why today? What's really spooking a market that was not too long ago hitting new highs? Well, the answer really lies in the bigger economic picture. The Federal Reserve is trying to navigate through some pretty thick fog right now, and investors are feeling those uncertain effects. Here's the core of the issue. That recent 43-day government shutdown created what's being called a data blackout. Key reports on things like inflation and jobs just weren't released. That means the Fed is missing the critical info it needs to make decisions on interest rates. And look, this isn't just some small delay. The data gap is serious. A White House advisor even admitted that some of this data, like the unemployment rate for October, might just be lost forever. So the Fed is, in many ways, flying blind, missing some of its most crucial instruments. So, how has this completely scrambled expectations for what the Fed will do next? Well, just look at this. A month ago, the market was 96% sure we'd get a rate cut in December. As of today, that probability has plummeted to just 52%. It's basically a coin flip now, all because of this data uncertainty. So to wrap it all up, here is our Pulse verdict. What started as a tech-led sell-off from profit-taking got a huge push downhill from the uncertainty created by this government data blackout. That uncertainty has pretty much crushed hopes for a sure-thing Fed rate cut in December, leaving the market in a very jittery state of limbo. All right, that's the Pulse for today. If you found this breakdown helpful, let us know by dropping a 1 in the comments. And of course, don't forget to subscribe for our next Market Pulse Flash. Thanks for tuning in.